TFNN.com.
The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN, 8:30 a.m. on Thursday, 60 minutes to go until the opening bell. And as we await, we're going to get the weekly jobless claims coming out right now as we speak. The market expecting, the 21st consecutive week of a million-plus initial claims. We'll bring you that number when it comes up on our screen. Right now, we have markets slightly in the red. You're looking at an S&P right now, negative by about 5 points, trading at 34.74. Dow negative by 40 points, 28,272. You get the NASDAQ right now negative by about 29 points, 11,961. Hurricane Laura making landfall in the Gulf. Oil holding pretty steady, though. Oil actually negative 28 cents right now at 43.11. And what's the number come in at? The number, weekly jobless claims, 1 million on the dot. We'll bring over the headline. There is your headline. U.S. weekly jobless claims total 1 million, right as expected on the dot. Let's see. So came in right at a million, down from 1.106 last week. The market digesting that as we speak, jumping back to the indices. We're up a couple points on the S&P, looking like the market was a little bit worried that things were going to escalate to the downside as the S&Ps actually rise a couple of points initially on that weekly jobless claims number. Jumping around to commodities. Gold contract, quite a day for gold yesterday, charging higher from 1908, making a low at about 8:30 a.m. 24 hours ago. We charge higher to a high overnight at about 6 o'clock of 1963. Gold's backed off a bit, kind of been jumping around between about 1945 and 1950 this morning. As we mentioned, the oil contract, we initially got the big spike on Tuesday that had to do with really when Laura started to accelerate and grow in the Gulf. Yesterday, you saw a little pop as well. Backing things up, 9 o'clock, oil trades from 43.12 up to 43.78 since then, though 43.25 on the crude number. Notes and bonds, big day for Chairman Powell. He will be out speaking in about 45 minutes, 40 minutes from right now. We'll go over that in a moment, talking about that they may be approaching inflation a way they have not in a while, expanding the range that they're comfortable with and allowing to inflation to heat up a little bit more than they may have usually in the hopes of making sure that this economy is growing and we don't get stuck in a period of low growth dealing with the pandemic. Powell's going to be out there today. A lot of people are going to be listening to that. We're dealing with a 10-year yield right now of 0.68% in the 10-year. You get the 10-year price action up about 3 ticks right now at 139.08. The 30-year up about 4 ticks, trading at 176.20. We'll jump around to some of the FANG stocks. Amazon will start it off. How about Amazon? 34.51. Quite an acceleration yesterday. We're hanging right near those highs at 34.31 this morning for Amazon. We'll jump around to Microsoft. Microsoft made it to 222.09. We're off a bit this morning on their shares. Apple trading at 508. We closed yesterday at 506. The high on Monday, 515.98 for Apple. Got to check in on Netflix. Netflix shares. How about that an acceleration yesterday, folks? From 490 to 549. We're trading about 541 so far this morning on Netflix shares. All right, jumping around to what else we have going on. I'm going to jump right into, where are we? That's not the one. There we go. Chairman Powell. So the Fed is expected to use the annual Jackson Hole Symposium this year to change the way it addresses inflation after it has taken numerous extraordinary measures to fight the impact of the coronavirus economy. So he is out there 9:10 a.m., as I mentioned, about 35 minutes from right now. He's expected to discuss a policy of allowing inflation to range on both sides of the target, letting it rise more than the Fed might normally do to help keep the economy from being trapped in low growth. Chairman Powell, he's got quite a load on his plate, folks. And here we go. We also get a second reading on Q2 GDP, down 31.7%. 32.5 was the expected number there, so a little bit less than they were looking for in terms of the decline. The way the Fed's expected to meet its goal is to say it will have an average inflation target, and Fed watchers say officials may provide a band for tolerable inflation levels above and below the current target of 2%. They're expected to make that announcement at Powell's 9:10 comments. Treasury yields have been rising ahead of that symposium. The rates markets are anticipating the Fed's going to be dovish and willing to withstand inflation being higher for a long period. Fed's taken extraordinary actions to fight the coronavirus pandemic, of course, so that'll be interesting. That kicks it off at about 9:10 this morning. Our man Larry Pesavento, he'll be live on the air for that. I'm sure the market will be watching that closely in a big way, folks. All right, what else we got going on? Jumping into stocks making moves. It is still earnings season. We got some retail stocks out there. We'll start it off with Tiffany's. Tiffany's trading higher this morning. As they report a mixed quarter, they were helped by an improvement in sales in China. The company said global sales trends continuing to improve. Comp store sales fell 24% from a year ago compared to the drop of 16.9% expected by analysts. Pretty remarkable, right? Analysts were looking for a decline of 17%. Same store sales. It comes in at 24%, and the market says, buy me some more Tiffany. From 121.52, come out with the numbers. We're trading this morning at about 123.58 for Tiffany. Some context on where we've been on that stock. Talk about some volatility. From 134, we spiked down to a low of about 109. Tiffany hanging at 121.52. Abercrombie reported an unexpected quarterly profit. Abercrombie & Fitch, an unexpected profit. That amazed me. In addition to seeing revenue come in well above forecast, Abercrombie said, however, that it expects continued material adverse impacts from COVID-19 pandemic. I would say so, folks. Those malls not going to be like they were anytime soon. So we're at $11 as of yesterday, down from about 18 or 17 pre-COVID, the low of $7. But when you zoom it in this morning, we're trading a buck higher, basically. From 11.13, we're up at about 12.36 for Abercrombie & Fitch this morning. Burlington Stores. Burlington Coat Factory lost 56 cents a share compared to the estimate of $1.04 a share loss. Revenue came in slightly below estimates. Comp store sales in reopened stores down 14% from a year earlier. Not that bad when you put it in consideration, right? 14%, not the end of the world, considering how much the world has changed over a year. But that is only on stores that are open, too. You know, they're probably open in the stores that might see some foot traffic. The stores that are just going to be lost in the mix, they're not opening. It's kind of a shifty number. The company said it should see improvement this quarter as it replenishes inventory, but warns it sees, quote unquote, a lot of risk as well. Yeah, folks, you should not need these companies to tell you, especially a company like Burlington Stores, that they see a lot of risk in the future. And this morning, we're basically flat from 196.43. We're trading this morning right now with a bid ask of 195 by about 200. Coty, the cosmetic maker, they've done a lot of work with those Kardashians. That's what I always think of when I hear Coty. Buying the Kardashian brand. Reported a loss of 46 cents a share. Market was only looking for a loss of 12 cents a share. Revenue came in below forecast as well. They said the quarter and the full fiscal year severely impacted, but that it expects significant improvement for the current quarter. Well, let's see how we're doing. Not so much. From 395 to 367, they just started their conference call at 8 a.m. Dollar Tree out with their numbers as well. They earned $1.10 a share, 18 cents above estimates. Revenue top forecast as well. And we'll get into both Dollar Tree and Dollar General when we come back from the break. Let's check in on the markets as we got second quarter GDP and we got those jobless claims. The market hanging pretty tough at about 34.73 right now. We'll be right back in 3 minutes, folks. Stay tuned.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The gold report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the gold report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. I got a chart of Facebook up here right now. Quite a day Facebook had yesterday. Trading from about starting the day at about 283. We end the day at about 307. 303.91 is the official closing price yesterday. We're backing off a bit at 301.70. Pretty interesting out here when you get into the news. So Facebook talking about, now this, of course, negative news. There was a lot of positive action in Facebook yesterday. But Facebook warning that Apple's iOS 14 could shave more than 50% from audience network revenue. So this has to do with IDFA, which is basically a tracking device ID number that allows advertisers to better target ads and estimate their effectiveness. So iOS 14 could impact its advertising business, but the company posted a blog post Wednesday that outlined some specifics of how that may play into things. Today, advertisers can use a unique device ID called the IDFA to better target ads and estimate their effectiveness. In iOS 14, each app that wants to use these identifiers will ask users to opt into tracking when the app is first launched. Facebook said its apps will not collect IDFA information on iOS 14. They also said that 1 billion people see at least one audience network ad every month. Now, many of those, when you talk about worldwide especially, are on Android phones, and they will not be affected by the change. But pretty remarkable when you talk about the need for privacy. You're going to see this as a constant shift, I believe, especially for Apple. There was a time back, I recall, on one of the previous iOS updates where what Apple started doing, I'll see if I can find the graphic on my phone. I may still have it because I grabbed a screen capture when it popped up. And it said, do you know that, and I believe it was Facebook, is tracking your location data even when you're not using your phone. Now, I pride myself on being as protective as I can with my phone data, saying, no, I don't want apps using my location data, especially when I'm not using the app. Sometimes you do want the app to have functionality to be able to use your data if you're using the app. It provides greater operational ease with some things, just knowing where you are, providing access to certain things in your area. But the scary thing was Facebook basically had my data of where I was every 15 minutes of every day of my life and I wasn't even aware of it. And iOS told me that. So Apple is making progress there, and this may be the first step in a trend that we start seeing of less ability for certain apps to track certain individuals, certain aspects of your phone. Facebook, though, pretty unchanged on this news, folks. This was out yesterday as the market charged higher, about 8%. So a lot of good news on that as well. Checking back in on Salesforce, talking about stocks that traded higher yesterday, giving back some of the gains yesterday. We're trading at about 267 this morning on Salesforce. Closed it out at 272 yesterday from 216. You started the week, folks, at Salesforce at 205. How about that? You could have bought Salesforce at 205 and you would have made $67 as of yesterday. You're talking about almost 35% increase in the price of Salesforce. You get added to the Dow on Monday night, earnings on Tuesday night. Remarkable run on Salesforce. All right, getting back to some of the dollar stocks as we mentioned. Dollar Tree, they earned $1.10 a quarter, 18 cents above estimates. Revenue topped as well. Comp store sales were up 7.2%. The market was only looking for 6.2%. Dollar Tree, kind of a case of what have you done for me? Lately. 108.80 they spiked to, but that was short-lived. We're under 100 right now at 99.25 on Dollar Tree. We'll jump over to Dollar General as well. Basically a little positive, but you see the volatility on their numbers to 214, down almost 200. We're trading within about $2 from yesterday's close of 204. You see the action, though. We closed at 204. Within about 15 minutes, you trade up to almost right where we are right now of 206 for Dollar General. For some context on where these stocks have been, right? Check out that run from 167 down to, technically the low there is 125 on the dot. Even if you look at where this consolidated for a low, about 136. We're going to open today at about 206 on Dollar General. Dollar Tree, though, pretty similar, just not quite as exacerbated. We were at $93 pre-COVID, down to $60. We're going to open today at about $99, as I mentioned, on their earnings. And Dollar General, they earned $3.21 a share. The estimate was $2.44. Revenue above forecast. How about comp store sales? Up almost 20%, up 18.8% for Dollar General, better than the market was looking for, which was about 15%. They also announced a $2 billion increase in its share buyback program. That's a lot of dollars for the Dollar General store, $2 billion of them to be exact, for the buyback. Both Dollar General and Dollar Tree benefited from the pandemic fuel shopping for essentials. Sanderson Farm, the poultry producer, poultry, inexpensive. Some of these poultry producers, right? They reported a quarterly profit of $1.48 a share, well above the 95 cents the market was looking for. Revenue beat as well. They saw strong demand for products sold in the retail channel, although it did see volatility in other areas of its business. Yeah, a lot of these companies, right? You go straight to the grocery store in terms of what you're thinking. Look at this. From the end of last year, we were 179. Pre-COVID, though, this was already kind of priced in now. You're dealing with whether you're at 140 back in the beginning of February, even in May, you were up at about 145. And we're trading this morning. We are higher on their numbers. There's your action. Oh, where are we? Yeah, I don't know. It's not giving me the print. But we got a bid ask this morning of 121 by 125 on their earnings. Box out with their numbers, beating estimates by 6 cents a share with quarterly profit of 18 cents. Revenue above forecast as well. You want to talk about a good space to be in right now, folks? The cloud. Just go ask Salesforce how that's going. The provider of cloud data storage services also raised its annual revenue forecast as the jump in people working from home boosts demand. And we'll jump over to both of these charts in a moment. Williams-Sonoma, they earned $1.80 a share, beating $1.01 was the estimate. The retailer's revenue came in slightly above forecast. Comp store sales were better than expected. E-commerce jumped 46%. Stock's under some pressure, however, with the company not giving forward guidance and saying it sees a sizable headwind from shipping charges. A lot of their products, probably not the lightest products in the bunch. They're having to pay for those products to be shipped. We'll start it off with Box in the cloud. There's your action on Box last night from about 19 to 22.40. We're trading at 21.26. And Williams-Sonoma shares, yeah, there you go. Not, it's never a case, folks, of what you did for me the last 90 days. It's always, what are you going to do for me in the next 90 days? And it should be. because that's already priced in there. And if you're going to have trouble in the next 90 days being a shareholder today, you're not going to be benefiting from what they did prior. You're going to be, stocks are forward looking, and you're going to pay the price as Williams-Sonoma is today from 100. You spiked to 87.50 initially, but looks like we're settling about 6% lower at 92.22 on Williams-Sonoma. Back to the markets as we wrap up this segment. Pretty muted response with everything going on today, right? We got 1 million jobs for weekly initial jobless claims. We'll get into that a little bit more after the break as well. We'll check out continuing claims, which is always an important number. But we're dealing with the 21st straight week of 1 million plus initial jobless claims. Before COVID, the biggest number ever was 700,000. We're now on 21 straight weeks of 1 million initial jobless claims coming into the market. I mean, there were 1 million people just in the last week that filed an unemployment claim. This is still a tough deal, but the market shakes it off. We're off about 6 points, and we're pretty much right where we were before that number came out at 8:30 this morning. Stay tuned, folks. We'll be coming back. We'll go over some of those jobless claims, the continuing claims. We'll be right back in 3 minutes.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as...
Whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step-by-step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So we got markets in negative territory, but just hanging out where we were. We got Chairman Powell. He's going to be kicking off his speech in about 15 minutes. Should be an interesting morning in the markets. S&P's -4. You got the NASDAQ negative by 24. Dow negative by 24 as well. Gold contract right now. Gold trading down $2 at $19.50. Silver off 11 pennies. And you got oil off 15 pennies as well. All right. jumping around to what else I have on the radar, we're going to kick it off with that weekly initial jobless claims. So it was 22nd time in 23 weeks that initial claims were above 1 million. There it is on the graph right there. Here is the number that we just got week ending August 22nd. It comes in at 1 million. The number I'm always keeping an eye on is the continuing claims coming in at 14.53 million, only down by a couple 100,000. I mean, this just isn't going to end until the virus is over, folks. I mean, that's what all this data is saying. There's no doubt about it. It's going to take a very long time if we're only decreasing that continuing claim number by about 200,000. We're at 14.53 million right now. We got a long way to go, especially when we're dealing with basically a stagnation of around 1 million claims a week right now. The other story that I found particularly interesting right now is, we're reaching this time where we're in a moratorium on evictions, right? We have a moratorium on utility shutoffs. Well, this article gets into some pretty dicey action here that as of the end of September, many of the orders that were passed, 32 states passed utility shutoff moratoriums that would leave potentially 34 million households without shutoff protections. In some states it gets into here, you have as many as 1 out of 3 people. That's 1 out of 3 people. Yeah, as many as a third of households are behind on payments when typically that number is only 7 to 9% of Americans. Remarkable. The other story I thought pretty interesting, Kevin Mayer. He was at Disney, jumped over to TikTok. The world changed a lot since he took over that role, and he said, yeah, I'm not interested in that anymore, as he is leaving TikTok. And Amazon, they're going to be launching a new store called Fresh that's going to be basically the discount alternative to their Whole Foods. They got all the segments covered. Talk about having it covered, folks. Stay tuned. Larry Pesavento, he's coming up live.